Hi everybody, my name is Sunny Panu, and again we're here on our Minorum YouTube channel, and I have another special guest with me today, Mr. Sean Brodrick of the Oxford Club. Sean, thanks for being on the channel today.
Thanks for having me on. It's always good to talk to you, Sunny.
Yeah, so we're here at the Sprott conference, and what's interesting today is that we're seeing a lot of speakers today. Includes Rob Friedland and Eric Sprott and many more. But more so, I think the topic of the last few weeks has been the gold and the silver price. I mean, you've seen such a recent takedown of the price now down to 1096 gold and 1475 for silver. What is your opinions of the recent drop?
I believe that we are seeing more selling out of China. I think China actually wants a lower gold price. Of course, now we're going to have to talk over sirens. Folks, the sirens are not coming for me. Even though I'm saying, sounds crazy, they aren't coming for me. But no, I think China wants to accumulate more gold, and one way to do that is to sell a bunch of it and scare people out of the market. We are already seeing selling out of the GLD. The last time that happened, that took gold down quite a bit. Now, we've seen gold test support at 1,080. It will probably test that again. I think we'll see an overcorrection to the downside, as always happens. You always get a move one way or the other, but I think that'll be a great opportunity to purchase both the metal and the miners. That said, if I was going to own something short term, I would rather own the metal, because even though the miners have had the stuffing beaten out of them, the more gold goes down, people start to panic, and right. I don't think we've seen the panic in the miners yet. Right. So that means, of course, you'll have a great opportunity to buy them, but I don't think we've actually seen panic yet.
Right, and I guess we'll see that the amount of interest from the Chinese and Indian investors, more so Chinese on the Shanghai Gold Exchange withdrawals, we'll see that over the next couple of quarters.
Now,
and we'll see if this is reflective of that.
Right, those have been going up. However, we've also we saw one thing that triggered the most recent slump in gold was a huge sale out of China.
Right.
In like a matter of minutes, an extraordinary amount of gold was sold onto the market. Someone who definitely has the gold to do that would be the Chinese government itself. I think they want to accumulate a lot more, and one way to do it is to knock prices down and so force out the weak hands. They can come back in and scoop it up. You see that in stocks all the time. There's no reason that can't happen in gold as well.
So I guess this is a great opportunity to look at these metals look at these metals as an investment, but purely as a metal at this point based on this price.
Right. And one thing you should be doing is making a shopping list of companies that you want to buy at the moment of peak panic. Now, of course, we can never really judge when that is. You don't want to try and catch a falling knife, but when things start to turn, and of course you'll see it in the middle first. Excuse me. You'll see it in the miners first, because they always seem to know. They always seem to know one way or the other. So when the bottom starts to form, you'll have your shopping list ready, and then you can pick them up.
So how do we go forward now? You said there's a big sale from China. Now, there's also been some reports out there of an alarming short position on the gold position itself. Given all this, you've seen even one of the largest jewelers in India just bought actually Valcambi, one of the refiners in the world, for $400 million. So do you think Chinese and Indians will still continue to buy gold?
Well, again, I think in the shorter term, we'll see more sales coming out of there. I think they want things lower. Longer term, we know culturally, right, the Chinese love gold. They do. And they have good reason to, because there's some shifty stuff going on with their banks that you might want to hold a portion of your wealth in gold over there, right? So there's a lot of good reasons for the Chinese to continue buying gold, and we're also at a time of no inflation. When inflation finally rears its ugly head, as it will, as it always does. I mean, I don't have a crystal ball. You just know that eventually it does. And with all the electronic money being created and sloshing around in the world, at some point that's going to enter the system and it's going to force prices higher. So when that happens, then people will want to own more gold, and yes, I think you'll see more buying out of China, out of India. I just don't think in the short term we'll actually see a lot of it right now. Okay,
and I guess as a last question here, with the recent drop in gold and silver, how do investors now, you said to look at all these companies very closely, look at a basket of companies here, but how do they look at that when there's been a recent drop? Is that priced in right now, or is it going to be priced in later on? Because as you know, for producing gold, you need at least $1,000 of gold to
Yeah.
be profitable, and now we're on those margins. So an investor might be saying, well, you know what? Should I wait maybe a couple of quarters to see if they can still make money, or how do we go forward?
Those are excellent questions to ask yourself, and it is true that certainly there are miners now that are producing at a loss. I mean, really they are. And so you would think, well, those aren't the mines that I want to own because, I don't know when the bottom is. And there's another old great saying, which is the best place to pick tops and bottoms is on South Beach, Miami, and not in the gold market, which is so true. But you don't know when that bottom will come. When the bottom does come, the thing that will frustrate many investors is those companies that look like they were on death's door, deservedly so, because they're producing at a loss. They're the ones that will soar. They're the ones that will take off. So you have to decide if you're an investor or a speculator, because speculators will want to invest in those stocks that they think have enough money to last to the turnaround, but are losing money right now. Investors, because they want to sleep at night, will just invest in the rock solid companies that can make money at $1,000 an ounce and still do okay. And I like to sleep at night, so those are the ones that I would rather invest in and leave the speculation to the people with much faster hands, because that's who will really be making that money. But we are coming to bargain bin time. We really are. So I can't emphasize enough. Make your own shopping list. And as I was telling a friend of mine, because we haven't really talked about silver, but I knew that silver was going to actually head lower a week ago because I started buying it, right? And so just as soon as I start buying it, because I of course run the market, right? So silver has to show me who's boss and has to go much lower. So, but it's at a point where I know silver is below the cost of production. Therefore, if someone's going to buy physical metal, now would be the time, right? Because they can't produce it for the price you're buying it for. Therefore, that's a good time not to take all your money and throw it in there. But you know what? Pick some up now and then, because now things are cheap, and so that's when you want to buy things, when they're cheap.
Absolutely. Well, great feedback on the market, Sean. Thank you so much. And if you want to get in touch with Sean, you can visit the oxfordclub.com. I'll also provide the contact information, and you can contact him directly and learn more about his services on the natural resource space. Sean, thanks so much.
Thank you very much, and thank you folks for tuning in.